Hey guys, Dave with Moneyology here. Hope everyone is having a great weekend. Today is October 13th, 2019, and this is the energy sector review where we'll take a look at various different energy related ETFs, some pure play oil and gas, and then we'll take a look at a little bit of uranium, a little bit of lithium, natural gas, and see what we can find in terms of opportunities and trends that we can identify. So let's have a look. All right, so starting with the WTIC light crude oil contract weekly chart, and you see here we're in a very complex long-term symmetrical triangle. It seems like every time we hit the upper boundary of this trend line, we break down. Every time we hit the lower boundary, we either break down or find support and rally off of it. And so here we are again. We kind of broke down here, and so far this seems to be a fake breakdown, and that could be very bullish, have very bullish developments. One thing I've been pointing out in various videos on the energy sector is look at the difference between this breakdown here. Look how deep the momentum oscillators were versus how shallow they are here. So this particular move is suggesting to me that we're very close to a bottom rather than a complete breakdown to retest those lows. So time will tell if my view is correct, but I think the 50 level here is very important, and we're making lower or higher lows every time here in PPO, and it looks like we're very close to an upside breakout. If that happens, there are some really great opportunities that we want to take advantage of. Here's the light crude oil contract on a daily chart, so a little bit closer perspective. Here's this breakout based on that Saudi Arabia news here, and had this major breakout, and then really took out all the gains and went and retested that trend line from the bottom. And so we've had a kind of a rounded bottom here of late, and now we've broke out back above this trend line here. And notice that 38 level served as support. This is where we broke out last time from this fake breakdown here. 38 was where we really took off. And frankly, it's where we took off here above this breakout. Again, that 38 level. Frankly, that's where we broke down here was that 38 level. If you look back again here, this is where we really took off for a major leg higher. Was 38, and again here is where we broke down around, I would say, around these levels. That was 38. So 38 RSI is a very critical level, and we broke above that right now, and we found support, and now we're testing 50. So 50 is going to be very interesting. You see the moving averages, the 50 and the 200 are rolling to the upside. You see PPO moving to the upside, and so therefore I think there are some really good opportunities. I think eventually this trade will send shares back up to that 67 level. The question is how fast. That's anybody's guess, but we'll be watching, and we'll be trying to take advantage of some of these opportunities. So let's take a look at some ETFs from a weekly perspective to see if we might identify some tradable opportunities. So here's the DBE Energy Fund, and this one also is in a symmetrical triangle. But notice here we have broken above, ever slightly so, broken above the downtrend, and that's a positive first development. Again, it leads credence to the argument that I think an upside breakout is increasingly likely. Look at the MACDs are now slightly but above zero, having created lower lows and in theory higher highs. So we're at the highest level right now since back in March in terms of the MACDs. So here we are on the verge, in my opinion, of a breakout to the upside in oil. Here's another energy. This is the equal weight energy ETF from the S&P 500, and so we had effectively a triple bottom here. Didn't quite get there, but notice momentum was higher on every consecutive leg of that bottom, and I think we're very close to an upside breakout in terms of RSI. We hit it 3 times, and now having bounced off the 38 level, let's see if this can finally take advantage of the overall bullishness in the markets and move to the upside. Energy sector ETF, the XLE. This is some of the major names in the oil and gas space and energy space. And again, triple bottom. Obviously, they've had some kind of lower breakdowns, but effectively a triple bottom with higher highs every single time. And again, we're coiling towards an inflection point on this trend line, and I think that it's going to break to the upside because of the various different factors that I've seen, as well as if you look at the daily and the monthly, it just adds credence to the bullish case, in my opinion, to the upside of a retest of that 76 area at some point in this breakout leg. And also, I will point out that what's unique about this entry is that you have a very well-defined risk. So you have the stop loss below 55 is where I would put a stop loss, and the upside is 76, at least in the near term. So, if it breaks lower, you're out of that trade with a small percentage loss. If you're right on this trade, then you've got a many fold percentage gain to the upside. Here's the oil and gas equipment ETF. And even though we broke down, notice we broke down to new lows. There was no triple bottom. There were 3 consecutive lower lows. But momentum was higher, with one exception here. Momentum has created higher highs here. And I think that's a positive divergence that will ultimately resolve itself to the upside, but it needs confirmation from a price standpoint. A break above, I would say, about 870 would be that confirmation to the upside. But again, a well-defined risk-reward entry with a stop loss, I would say, below 6, and I think a really nice upside is indeed possible. Oil and gas exploration ETF, XOP, another one that has created new lows, but again, momentum has not uh, created new lows, and that's a positive divergence that's very important. And we're very close to that inflection point. If it breaks above this trend line, you're going to see a very strong rally in the equity names in this particular gas and oil and gas exploration sector. Okay, here's the small caps. This is a sector, an energy sector that's been absolutely beaten down and destroyed. Many companies have gone bankrupt. However, notice you're creating higher highs, and we did not break this new low here. Did not break the 31 level of RSI. That's very important because that's a critical Fibonacci level. So if you can hold here and follow through above that $8 zone, then this is going to have an explosive upside breakout. And so I really like the risk reward here as well. Stop loss below $6 is your downside, and your upside is at a minimum here at around 1170, and I think ultimately gets towards that 18 level. All right, natural gas. So natural gas has also been getting killed, but again, positive divergence on each of these levels. So natural gas still looks weak to me, and I don't have enough evidence to suggest that. Yeah, for example, there's enough evidence in the various energy plays to suggest that energy is likely going to break out to the upside. I don't see enough evidence here for me to be comfortable with this trade. Perhaps a nibble here with a stop loss below 10 is something I would look at, but ultimately it needs to break above 13 here. It needs to break above this downtrend before I get comfortable with an upside entry. Nonetheless, 31 level is an area to watch, and this downtrend is an area to watch, and let's see which way it resolves itself. Clean energy ETF. This one has just been doing nothing but going up, and a very well defined price range. I will say it had two negative weeks here back in September and October, and it's rallied above those. It found support at this upper boundary of this RSI downtrend, and it's bounced each time. And now it's found support at that 50 RSI level, which is critical. And if it can bounce higher, this can be a great risk reward entry. Stop loss below the 2850 area, and perhaps a move towards that 32 zone is a possibility. Okay, let's take a look at nuclear. So this is the uranium and nuclear energy ETF. This one is not necessarily the explorers and producers. This is more of the the utility companies and larger names. That's why it's trading at 52-week highs and not 52-week and 10-year lows as URA is, for example. But notice this downtrend we've been in since 2017. Every time we've hit this level, we've gone lower, and it's had a very interesting week so far this week. Look at that, up and down, But this 4850 area is an area that I would watch very closely. I think so long as we're above that area, this particular sector will do fine. But if and with a potential upside breakout here above this trend line, with an initial move towards that 53 area. But you've had this last week was a little bit negative, broke below 50, and I want to see this break above 50 to the upside before I'm comfortable with this particular ETF. But nonetheless, I think that there's more upside potential than downside, and so the risk reward is there. Now with URA, this is more of a not a pure play uranium ETF, but this is more focused on the producers and the explorers versus the utility companies. And this one is very, very interesting. Look at where we are right now in the trend line right here. We're extremely close to an upside breakout. Now, the reason why this time may be different versus other times we've fallen back is you've got the MACDs firmly moving to the positive, above zero direction. Whereas a lot of times when we've been hitting this area, they've been already starting to roll over. So there's a lot of built up momentum, and unlike here where you've had the various different moving averages consolidating, converging above. Here, they're starting to serve as support underneath it. So that's another very positive development. So it has not yet, and I repeat, it has not yet broken out, and it's very possible with the various fundamental news it can roll back over. I'm not saying it won't. However, there is enough evidence, especially with the bullish seasonality right now, that suggests that this can have an upside breakout. And if that breakout does occur, this move will be more explosive. I repeat, more explosive than the move in precious metals that we saw so far in 2019. So buckle up, and you've seen my premium videos, many of you, and some of these have been offered for free. And there are some really great opportunities. And if you do your due diligence, I think you'll be handsomely rewarded. Here's the oil services ETF. And this one, again, lower lows in price, but higher lows in momentum. And it's very close to an upside breakout. That's another indicator that suggests that oil has upside rather than downside ahead. For me, to be comfortable, I want to see this break above 13. But again, a stop loss here. Right now it's trading at 1152. Stop loss below 1076. And I think I'm comfortable with the risk reward. Solar ETF. Solar is in a bull trend, but now it's got momentum weakening. You have had this negative divergence, higher highs, lower lows, and it finally broke down below 61. It's trying to recapture those levels. So for me, I want to see this break above 31 and recapture that 61 level before I'm comfortable riding this to the upside. Ultimately, if it cannot recapture 61, back tests and moves lower, then the 50 level will serve as support, likely heading back towards that 27 on the TAN ETF. It might take a couple weeks, but I like the fact that 2 straight weeks of hammer patterns, despite the negative MACDs, despite the negative RSI. So it's kind of solar among all of these looks the weakest right now, but it's had quite a run in 2019. So pullbacks like this are possible. Global Wind Energy ETF. This one looks like it's setting up for a breakout above 1360. This one, you've got the moving averages 13 and 26 moving averages serving as support right underneath it. You've got the MACDs very close to a upside breakout, and you're consolidating right below the 61 level, which has been a really, really strong level of resistance. This is the point where we broke down here, point where we broke down here, point that we broke down here. So 61 here as well. It's a very strong level of resistance. You look back over here as well, and we're very close. But this time we're consolidating from the downside, and I think setting up for an upside breakout above 1360. This would be a very strong risk reward breakout. Finally, lithium, not necessarily a metal like uranium, but it's very connected to the metals complex, or rather the energy complex, and I think it's important to keep in mind in the scope of the overall commodity and energy space right now as it relates to the markets. And right now you've got the 13-week below the 26-week moving average. That's a negative trend that it's in, without a doubt. But if you step back and you look, this is around the bottom breakout that happened back in 2017. This is a cup and handle bullish flag. It's hard to see it from here because you've dropped from 40 all the way to 20. That's a 50% drop. However, despite this drop right here, you've had you haven't really created new lows, significantly new lows, like price has. And now even though you're below the 25 critical 25 area of resistance, momentum is much higher today than last time we were at that level. So it's very, very close to an upside breakout, having bounced off that 38 level. I think it breaks above 25 and is going to make a run at the minimum towards those moving averages, and thereafter I think it's going to move much higher, and ultimately retest these levels at 39. By the way, this looks like it's not the 26 and 13-week moving average; it's the 50 and 200 weekly moving averages. So just for transparency, PPO rather MACDs are firming above zero, and this looks like it's a trend that I want to be a part of, and we're gonna post, if not this week, then certainly next week, a couple of reviews covering uranium, covering oil and gas, and covering lithium, to and solar thereafter, to find opportunities. Now, solar, I think, is weakening right now, so perhaps not on solar, but oil and gas, uranium, and lithium are areas that we really want to look at right now because the opportunities are going to be very, very fruitful. Anyway, guys, let me know what you think. Thanks for watching. Thanks for sharing. Thanks for being part of the community. And have a great day. Have a great week. Take care.